Ladies and gentlemen, my name is Greg Michael Aussie from ForexLive.com. Today's date is October 3rd. It's a new day, a new week, a new month, a new quarter. Good riddance to the month of September. We're into October. It's supposed to be a better month. Let's take a look at some of the technicals that are driving the Forex markets and trading here today. Looking at the euro versus US dollar, this is the hourly chart. On Friday, we moved up toward this 50% retracement of the move down from this high to this low right here. The 50% comes in at 0.9866, also near that level. There's some swing levels here. We have a swing low here, swing low. It came down, swing low through here, broke through the downside there. Traded a little bit above and below it before the market started its final move to the downside here that took the price to the lowest level since 2002 here at 0.9535. That was on last Wednesday's trade. Then we saw the sharp moves to the upside, correction back down toward the 100-hour moving average and move above the 200-hour moving average on Thursday and closed above that 200-hour moving average on Friday. Again, holding resistance against the 50% retracement against the swing area on the downside. We're going to be watching, as mentioned during the weekend video, the 200 and 100-hour moving averages. 200 is the green, the 100 is the blue. Also, this swing area right here corresponds with, if you go back to the weekly chart and you look back in time, all the way back to this area through here. This is June to October of 2002 on the weekly chart. That area comes between the 0.9662 and 0.9708 level, and that corresponds with this area right here. So getting below these levels would increase the bearish bias after a short-term move above the 200-hour moving average and 100-hour moving average, turning the bias a little bit more to the upside. So we knew that the price needs to get above this level to increase the bullish bias. We know that the price needs to get below these levels to decrease the bullish bias and turn on the bearish bias as a result. And also this swing area on the weekly chart is going to be key from a technical perspective this week. In between this high and this area down here is this swing area here, where swing low before breaking to the downside. Admittedly trading above and below it on both Friday and today's trading here, so it has a little less influence, if you will. I still think these areas are the best ones for your trading bias and risk defining level. Let's take a look at the dollar versus yen. And as you can see, the price was able to get above the 145 level here today. Some brave traders went into the unknown area here. Remember, the Bank of Japan intervened when the price moved above the 145 level here. So moving above that level is sort of going into no man's land here with the potential for intervention, but of course nothing really happened here. The price started to rotate back to the downside into this trend area on the downside. We do have the 100-hour moving average. Price moved above and below it on Thursday, Friday, and a little bit here today before bouncing to the upside, getting below the 144.60 level, 144.577 level. Swing area going back in time would have traders looking toward the 200-hour moving average. A week ago, Friday, the market closed right around the 200 and 100-hour moving average. It spent the entire week last week above that 200-hour moving average. So getting below the 200-hour moving average would tilt the bias more to the downside here for the dollar versus yen. Overall, we are seeing a little bit of a weaker dollar here in trading today. So at least against some of the currencies, well, the dollar yen is still higher on the day, but we'll see if that trend continues here in the early U.S. trading for this currency pair. Let's take a look at the sterling versus U.S. dollar. And on Friday, we moved up to test a 61.8% retracement, and also this swing low before moving, and then swing high before moving sharply to the downside in last week's trading, with the price bottoming at the lowest level ever at 1.0353. This area right here between the 1.0520 and 1.0545, you have to go all the way back to 1985. Those were the old lows on a monthly basis, and you can see in last week's trading, the price did come down to retest that area before bouncing to the upside. So that was a bullish indication there. Other bullish indications came on the move back above the 200-hour moving average on Thursday's trade, and then the holding of the 200-hour moving average on Friday's trade. So all those give a shorter term tilt to the upside here for the pound versus US dollar, and we're seeing a little bit more follow through to the upside here today. Of course, in the news is that the British Truss administration is going to take back that tax cut for the highest earners that was proposed and largely panned by the public and really everybody, that caused all sorts of problems for their government. So they took that back. That helped to push the sterling versus to the upside, sterling US dollar to the upside here today, getting above the 61.8% retracement. Staying above that level would be key barometer, I guess, going forward. If we look at the 4-hour chart here, the price is also testing the 100 bar moving average of the 4-hour chart. That comes in at 1.12490. If we get and stay above that level, that would be somewhat positive. And then we move into this area right through here, where we have the a swing low, and then swing highs through here. I'm going to have to put it on the hourly chart to see where those levels come in. Those levels come in around the 113.50 to maybe 113.60 area through here, where we had a bunch of different lows. So a couple things to get through here on the top side for the pound versus US dollar. 112.49, 100 bar moving average on the 4-hour chart, and then the 113.50 to 60-ish type area, which is this low and swing low and swing high level here in the pound versus US dollar on the top side. On the downside, if we're able to stay below those levels, and the market is trying to stay below those levels, we still have the 50% retracement, and then the 200-hour moving on to the downside to get to and through to increase the bearish bias. Also add the 100-hour moving average along with this broken trend line through here. So buyers are making a play. We'll see if they can hold that play in trading going forward. The dollar versus Canada and some of the other commodity currencies are reversing their fortunes, their trends, I guess, to the downside. For the dollar versus Canada, we closed near the highest level of 2002. We actually took out the high level on Friday by a few pips, and then rotate a little bit to the downside. And in trading here today, we had to move above that area to give the buyers some bullish bias here. As mentioned over the weekend, in my weekend posts, we needed to get above the 38.54 level as well. That's this swing area through here on the weekly chart. And I mentioned that we may have some upside selling pressure. Here's that level up here, and indeed we did. And we started to move back down toward the 100-hour moving average, toward this trend line. We're trading right at that level right now. So move below that level increases the bearish bias, keeps the potential open for a retest of the 200-hour moving average, which was last broken back here on September 13th. Both the Aussie dollar and the New Zealand dollar are also seeing little bits of moves above their 100-hour moving average. Here's the Aussie versus US dollar. That level comes in at 0.6457. Get and stay above that level would be a step in the bullish direction after the failure on Friday's trade, moved down toward the lowest price of 2002. So trying to rebound there. Need to get above the 200-hour moving average. Haven't been above that since September 12th. And finally, the New Zealand versus US dollar is also trying to move back above its 100-hour moving average after moving same pattern that we saw in the Aussie versus US dollar. Stayed above the 2020 low through here, but rebounding and trying to get above this old trend line right here. I talked about this in the weekly video as well. This trend line has a number of different support and resistance levels. After it was broken against that line, it's sort of a remarkable line actually. So get above that level would be more positive. Looking forward to 200-hour moving average, which also hasn't been broken since going all the way back here to around September 13th. So there you have it. A look at some of the major currency pairs, so good fortune with your trading. If you like this video, give it a thumbs up. Please subscribe to our YouTube channel, and be sure to click the button that gives you the notifications that a new video is up there. And also, your comments are most welcome. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.